Good afternoon, everyone. Welcome to Hit the Bid here on September 14th. This is Ty Robbie here with your Week 37 Market Watch. Today we're going to be running through our charts and seeing what happened across these markets last week. We did see continued downside here in the cattle market as prices continue to correct following this impressive summer rally we've had. Equity markets pushing up into new all-time highs as each of our indexes did print new highs last week. And a nice bullish reversal pattern unfolding over here in the corn market following Friday's WASDE report. So plenty of big movers from last week and should be setting us up with some good opportunities as we move into week 37. So let's get started. Quick note here, we are going to be starting with our live cattle, but we are entering a rollover period here, so we will be watching the volume roll out of this October contract over into December in the week ahead. December will be the new front month going forward, so our analysis will be focusing on this one in week 37 and beyond here. But for review purposes today, we will be taking a look at this October contract to see how it played out as its last month as the front month here. So we did see this October contract open up with a nice quiet inside day here on Monday before we did see the big breakdown day on Tuesday. Broke down below that 235 bear pivot, bringing in a nice day of downside, bringing in about nearly $6 worth of downside in this live cattle market. We did see feeders hit the limits over there on Tuesday, but both of these markets just pulling back into some nice deep value territory. Wednesday, Thursday, Friday's action playing out in about a $5 range here between 229 and 234. This market just kind of balancing out, digesting this corrective move here, and continuing to trade here between our major moving averages. Should be leading to a good dip buying opportunity here. We do still have this big picture uptrend remaining intact. We have had a nice impressive rally throughout about a 9-week span here, starting back in late June throughout the early part of September, putting in those new all-time highs up there at 242.07 on this October contract. This corrective move here is just pulling back into some good deep value areas. We did see throughout the late part of July and early August this market kind of trade here in a sloppy, slowly upward drifting range between this 225 to 232 area. We did see nice wide range days going back and forth here, so this is going to create kind of a sloppy area where we do expect to see dips be bought up, but we could see just kind of some sloppy action as this market tries to find some little pockets of buyers along the way. We are seeing here at the moment this live cattle market defending the 230 area. Seems to be a good round number that this market cares about at the moment. We can see over here that this October all the way out through April 2026, all trading right around this 230 mark, give or take a couple bucks, but that seems to be a pretty important price point in this live cattle market. So look for the bulls to continue to defend this line going forward. We did see some brief cuts below 230 last week, but they were kind of bought up here. That Wednesday's gap down there at 229 was immediately reversed, as well as Thursday's opening range rejecting any prices, any offers below 230. We did see a little bit of upside here on Friday morning, looking like this market might carry that momentum higher. However, they just ran out of gas, and the bears ended up selling this thing all the way back down here towards the weekly lows. No real sharp edges still here, though. We are seeing pretty equal distribution across these 3-4 days here of action, showing there's no hard breaking points at the moment. This looks like this market's just digesting this recent pullback and going to continue trading in some wide ranges here as it looks to find some good areas of support. We do have this rising 50-day moving average coming up here beneath price, so any undercuts of last week's low, we could try and see this market test that 50-day moving average. We'll have to see how the bulls respond with any more dips or any more downside here below 230, but we do expect them to meet it with some more aggressive buying activity as this big picture uptrend still remains intact, and we do expect to see this live cattle market turn around and head back towards those all-time highs. But that's how October's contract played out last week. Very similar action here on December. However, a little bit more strength here in some of these back months. And unlike October putting in a new low there on Friday, we did see December holding right around Thursday's low and failing to get back below that 230 mark, which was the low of the week on Wednesday's gap down. That was reversed. So this December contract at the moment showing good support and also defending that 230 mark. That will be the focus for the bulls going forward here. We want to make sure that they're continuing to defend this 50-day moving average and that 230 level. We could see some probes down there below it, but until we get a close below 230, there's really not much to be concerned about. I would expect to see the buyers get aggressive down here near these lows and try and hold this market in this area right around these major moving averages. The bulls want to see this market continue to balance out and get some momentum moving higher. This 235.75, we got a pretty wide range here between our pivot points, but that's just due to the wide range we traded in here between Wednesday and Friday's action. We will continue to monitor this market going forward here, as we expect to see this market provide a pretty good buying opportunity before another leg higher and move into the fall here, as we expect to see these higher prices continue. I just want to let this market kind of balance out, digest this recent move. Like I said too, with it being a rollover period, that can sometimes bring some choppy action. So no need to be real aggressive up here near the highs. We want to see this market show good support and tighten up, offer some good risk points to trade around before we get involved. But we still do expect to see this dip provide a good buying opportunity, and higher prices should continue out there into the fall and into the year. So look, we will be monitoring this and looking for some good dip buying opportunities. Just want to make sure that this market can continue to defend this 230 mark and hold this rising 50-day moving average as well. In the meantime, remain patient. Let this market digest this recent move. Let's see this volume kind of come over into December before we really get involved. But we should see this upside be starting within the next week or two. And we should see this live cattle market start to head back towards those all-time highs. We can go down the line here. Similar story all the way out through the spring and summer 2026 contract months, all balancing out in a 3-day range here and finding some good support. If we look left on this chart at this prior range here between the 225 to 232 on October, which corresponds here with about the 234 to 227, 226 mark on this December contract. So pretty big wide ranges here, just making kind of a sloppy, loose area to get involved, but we should see supportive action stepping in here and more upside to come in this cattle market. October feeders, same story last week. We are going to be focusing on October here. This contract will remain the front month here for a little bit longer. We are seeing volume uptick over in November, but October will still remain the focus here in the feeder market. Same story, balancing out here on Monday. Brief poke above Friday's high, but that was immediately reversed here with a limit down move on Tuesday. Wednesday, Thursday, Friday's action also trading in the wide range here, about a $10 range between Friday's low and Friday's high. Pretty wide ranges here, but good supportive action nonetheless here in these 20-day in between the 20 and 50-day moving averages. Pretty weak close here on October though at new weekly lows down here right around the 345 mark. We do have this similar area back here from early August between about 335 to 350. Very wide ranges here. We're dealing with these elevated prices in this cattle market. So we do have some wide ranges, but this whole wide area here is going to be a spot that we look to see these bulls continue to step in and offer support. It was looking like Wednesday and Thursday we are going to get that upside to come out of here sooner than later, but Friday's week close is opening up the doors to more downside potentially. With this week close on Friday, we could see some momentum carrying down below that bear pivot at 344.90, coming down here and testing the 340 to a high 330s mark. We do have this rising 50-day moving average up here right around the 341 area, but look for the bulls to defend this area. And if we do see prices pull back into these prior range lows, we should see the bulls continue to get aggressive down here, as these are some pretty good value area prices for the bulls, as this big picture uptrend still does remain intact, and we should see this feeder market reverse and head back towards these all-time highs as we move into the fall. Higher prices are expected to continue. This has just been a nice little corrective move here, trying to cool this market off following this impressive $70 rally we saw over the last couple months here. So this is a pretty minor pullback here in the grand scheme of things. We should see some good buying opportunities. We will continue to monitor this cattle market for a little bit better buying opportunities, and we want to see price kind of tighten up and balance out before we get involved here and catch this thing on the run out of this area. So just want to slow play this thing, continue to be patient here, and we should be seeing some good buying opportunities come in this cattle market going forward. Going out here into these back months, we did see same story all the way. Nice downside here all last week in the feeder market, as it has been the strongest of the two between the fats and the feeders. So we are seeing a little bit more weakness in this feeder market, but that's mostly just due to the wide ranges and increased volatility here in this feeder market. Like I said, though, as long as we're trading above this 50-day moving average, we should see plenty of good support over here looking left, and should be setting us up with some good opportunities. Just want to be patient and slow play this thing, look for this thing to reverse, and we should see some higher prices here as we move into the fall. Last week, we did have just a lot of quiet, choppy action in this corn market as we were awaiting that WASD report on Friday. We did see for about 8 to 9 days here, we did see this market kind of trading here between the 415 and 425 area. We did see a nice downside here throughout the early part of the year, but this reversal up here to this 50-day moving average and then just kind of a squat here between 415 and 425 was showing this market was needing a little bit of a catalyst to get that next leg going. We did see that here on Friday with that WASD report being released. Obviously, a very bullish reaction to it here, as we did have a nice, strong, heavy volume day pushing up here to the 430 area, finishing the week at 428. If we look left over here, dating back to early July, we did have this nice gap lower that continued to create some downside, pushing out all the way down here to these contract lows. We still do have this gap open here between the 430 and this low of the day was 432.75. So we still need to see this market continue to push up here. This has been an area of resistance over the last with that gap down and that retest of it back here in late July. We'll have to wait and see how this market reacts to it, but at the moment the bulls have the momentum favoring them and the wind at their backs. Look for them to try and push through this gap here and up into this 430 to 435 area. We're going to zoom out here pretty nice and wide, take a look back. This 430 to 435 area has acted as good support here throughout the last year, and prior support, once you break down below it, usually acts as resistance, and we have seen that a couple times here back here throughout the summer. We will want to see how this market responds in this 430 to 435 area. If we see this thing balance out and start to show some weakness, we could see this market just kind of get stuck range bound here in the low $4 range. But continued upside above 430. The bulls want to get this thing pushing up here into the mid 450s or the mid $4 range up here in the 440 to 450 area. But we'll need to see them break out above that 430 level. So at the moment, momentum is definitely favoring the bulls, but this 430 to 435 area has been a key inflection point over the last year, so we will want to see how this market reacts this week. If they're able to chew through this gap and keep on going, we could see a nice uptrend unfold from here as this market pushes up into the mid $4 range. But this 430 to 435 area is just going to be a key level to watch, see how this market reacts to it over the long term here. But in the meantime, expect this momentum to keep pushing these corn prices higher and a new potential uptrend unfolding here as we're seeing some nice trade above that 50-day moving average. So higher prices expected in corn. Just want to see how they react to this level we closed around last week. Oil prices had a pretty choppy week last week, just kind of trading here between the $62 and $64 range. Not a whole lot to be excited about in this oil market at the moment. Very little volatility recently, very little directional movement, lots of choppy action here, just a nice slow bleed here in this oil market. Over the weekend, we are seeing some headlines coming out with Russia and sanctions and NATO countries buying Russian oil. So we will have to wait and see how this market opens up tonight, see if it has any sort of response to that. Could cause a little bit of a dust up. However, very little directional moves are expected to come from it. Could be a sell the news type of event if we do get a pop here, as there's very little downside, or very little upside potential here in the oil market. But look for this market to continue chopping up here in the mid 60s. No real directional moves to be expected here. Any volatility coming off of the news from the weekend should be digested early in the week, and but other than that, not a whole lot to be expected here. Bears do want to see a breakdown here below 61.45, drawing a nice line here at 61.45 could lead to a nice push down here into the high 50s. But in the meantime, not a lot to be expected here in this oil market. Look for continued chop in the $60 range. Last but not least, moving over into these equity markets. Last week we did have some inflation reports coming out, and the market just kind of brushed them off like it was nothing, kept on moving up into new all-time highs. We have seen these equity markets kind of balancing out here. The NASDAQ has been the leader recently, but kind of got stuck trading in a range here over the last month to 6 weeks. The S&P kind of getting stuck here in this area as well. While the Dow was the laggard of the bunch throughout the early part of the year, has been breaking out above some key levels here. So kind of mixed signals throughout these indexes, but each of them printing new highs last week suggests more highs are to come. This uptrend still remains intact. We still have a very strong environment for stocks going forward, and we do expect to see higher prices as we head into the year end. One notable event this week, we do have a Fed meeting here on Wednesday with an interest rate decision and FOMC statement, so we will need to see how this market responds. A lot of the anticipation is expecting the first quarter basis point cut coming here in the September meeting. Whether or not that comes or not remains to be seen. But this market will be looking to see what the Fed has to say regarding the current situation and current rates. Soft Fed usually indicates a good, easy upside for equity markets, but it's always a good opportunity for some volatility. So we could see a little bit of a shakeup here as this market tries to react to whatever comes this week in the Fed meeting. Also got jobs numbers coming in on Thursday morning before the open. Big picture uptrend still remains intact. Still a very good time to own stocks. We do expect to see upside continue into year end. Do just want to urge or just signal some potential caution around this FOMC meeting, as we could see some volatility come from it. But big picture, we still expect to see these equity markets continue to climb. Nasdaq getting up there into new high territory after balancing out here, showing these leaders are starting to get back engaged and moving out of a second stage base here, which is a good sign, meaning the tech sector is definitely showing some good upside potential. And the Dow having a nice breakout here on Thursday, holding above a lot of these prior highs. Good breakout levels at a lot of different breakout levels we've hit here in this Dow index. So those old man index stocks should continue to climb as well. Nice pullback to 45.8 here on Friday. We should see that upside continue in the week ahead. But just want to have everyone be cautious and look to the Fed here on Wednesday to see how this market responds. So that's all we got for this afternoon. We'll catch you guys for tomorrow for closing comments. Thanks for tuning in.